Hello and welcome to ATFX's September non-farm payrolls preview. Very strange one this time because our September non-farm payrolls is coming to you in November, 48 days after its scheduled release. Obviously, we've had the US government shut down. They're back on deck now and they're trying to get through. But what we will do for the first time this week is get a little bit of clarity on the jobs market. So I think we have to look all the way back to sort of September. We had seen a huge decrease in jobs numbers over the summer, some revisions which hit the market hard. We saw expectations of Fed rate cuts moving up to the top side, but they've receded a touch recently. So we're now about 42% expectation for a rate cut in December at the last meeting of the year. Previous to this, it was up to about 95%. So there's been some massive moves, and to be honest, not too many moves in the FX market. So today we're going to have a quick look at what we're expecting from the numbers and their potential impact. Have a particular focus on dollar yen. We'll have a look at euro, cable, and gold, of course. First up, what are we expecting from these numbers? Estimates are coming in somewhere between a number of plus 50,000 and plus 80,000. One of the ones I've got out there is about plus 58. I'm thinking there's scope for some big variations in this data. It's going to be very interesting to see where it comes through. The unemployment rate expected to stay steady at 4.3%. And again, kind of boring. Average hourly earnings, again, 0.3% increase month on month. Where do we see the risk on this one? The leaning would be towards a lower number. That's the pattern that we saw coming up to this data being recalled. And some of the data we've seen since there, and it's been secondary numbers. So we've seen ADP numbers come through. Now, ADP actually came in a little bit stronger than expected last time out. And that's normally a traditional front runner for non-farms. We start to see some punchy numbers like that. We'll see some massive moves in the market and massive moves in Fed rate cut expectation. If we look at about 60,000, I'm thinking anywhere over 85, 90. I think there's going to be a bigger variance because there's going to be such a focus on the market. Anywhere under probably sort of 40,000, certainly if we head down towards zero, we'll see some massive selling. So huge potential for selling if that comes on the dollar. We'll see euro probably break to the top side and maybe dollar yen pop back into its range. If we do, I think the risk now, and it kind of sits with the way the market's just moved in those rate cut expectations, is that we get a stronger number. If we go north of 90 or 100,000, then I think that leads to some strong dollar buying, and we could see some big moves in the market. So I'll just have a quick look through. As I said, we'll look at dollar yen, we'll look at euro, we'll look at cable and gold. So I've brought up our daily dollar yen chart first. Now, the reason I've done that is because that's probably the most interesting one that we've got at the moment. Dollar yen, obviously, we've seen some strong appreciation. We've seen a change in government in Japan. It's moved up. Depreciation in the yen, and this is the real issue. We're looking at dollar yen quite closely, and probably more than the others, is that we have got authorities looking closely at this number. 155 is always touted by a lot of the Japanese corporates as a pain level for them. As you can see at the moment, we've just moved through it. It's been a relatively steady move, although we did see a 0.45 increase yesterday, and it's through that level. From a technical perspective, we're probably looking next resistance, excuse me, coming in near that high 158.87, so just underneath 159, and then back to those multi-month highs that we saw all the way back last year. I'll bring this chart in. So the risk, we do get a topside number, and this move accelerates more up towards this 159 level. It comes in above 100,000, or we see a reduction in the unemployment rate. That could really spur markets. The risk we've got then is that we see a move up and then very quickly down in case the Japanese authorities come in. Other risk, of course, is the downside. We break back down into this range. That probably is going to placate the Japanese authorities somewhat, but they have been known to occasionally, and very rarely, give it a nudge as well. So they get a lower number and then they help it by giving it a smack as well. And we could be back down to these levels, sort of 152. Where are these lows? They're coming in around 152.80. And there we go, 152.81. So very similar. Probably could have a trend line coming in here. Could be a very interesting move. So dollar yen, probably one of the favored majors to move, and move fairly hard. Let's have a look at euro now. So this is the daily euro chart. As we can see here, it has been fairly moribund, trading in a relatively tight range. 116 has covered it for the last few weeks or so. But from a technical perspective, we have got this flag coming in, support and resistance squeezing. So resistance now coming in around 116.34, about 50 points north of where we are now. Support 115.38, about 50 points south. So we could see a big move in the euro. As I said, negative numbers. If we come in, I think under 40,000, 30,000, expect euro to challenge that level very swiftly and then break higher. If it breaks higher through resistance here and these highs at 116.50, it could open the way back up into this range. So we're looking around 118. Conversely, of course, stronger number, that really would, I think, shake things up a bit. Downside support coming in 50 points lower. Previous lows just down here under 115. A break downside could see a swift move down to the 200-day moving average, just under 114, the figure. Quick look at cable as well. Cable's in a very similar situation. I'll bring it in a little bit tighter. We've got that flag constricting movements. Resistance now 132, he says. Resistance, and it's a day away, so probably about 132.20. Support will be about 130.50. We're right in the middle of the range. Expect either side of these to get challenged in very short swiftness if we do see a number away from these expectations. As I said, one of the data points I'm looking at the moment is 58,000 increase. We'll take that as a yardstick at the moment, but there's a lot of people calling between 50 and 80. So anywhere over 80, cable comes down. Anywhere under that 50, I suppose, will challenge these levels up above 132, and we could see a break up. Obviously, first stop 200-day moving average just around 133 at the moment. Last and certainly not by no means least, we'll move over to the gold chart. Gold is sitting in an interesting position as well, similar to what we got from dollar yen. Support trend line coming in here. It's had some really whippy moves. It looks like it's not too much, but look at this, 3% on that day. We got another 2% on that day, and then bang, it's come back down a similar amount. So we're seeing 5 or 6% swings within a week. We're now sitting near support levels. If we do get a stronger number, expect gold to break lower on the back of that stronger dollar, on the back of rate cut expectations really pulling back. And it should come down to challenge this low here, which is around about just underneath 3,900. And then it opens the way for a bigger move down here. Obviously, a weaker number expected to pop up 4,200 at the moment, the resistance. But obviously, got to throw that caveat on gold. We are seeing 2 or 3% moves in the day. So we may be back around these levels by the time it comes out in a couple of days' time, or even further down here. So good luck with your trading. If you need anything from us at ATFX, please do let us know. But non-farm payrolls, they're back on deck. It could be a very interesting week. Thanks for tuning in. And as always, if you haven't subscribed to our channel, we'll keep you up to date with what's going on in the markets.